Sorry, guys. Yeah. So yeah, it comes up to fill in a sense.
Yeah, but it can also give you an idea of what highs in the market might get swept. So you say when you back down to like the 5 minute, you'd have a high, obviously that created the form the bottom of the fair value gap, and that's what got swept. That's it. That's the sweep there that happened. I don't know if you box.
You're waiting for that point there for it was this area where you on the smaller time frame there'd be a smaller fair value gap, wouldn't there?
But yeah, all I was more concerned about was that it swept that previous day's high, and then
Yeah.
if you see it, you see the price action immediately after it swept into the fair value gap. How it back a bit, I think. Not that one, Sean. It's all the way back.
All the way.
Back the other way.
Oh, sorry, mate. This way. Sorry, this way.
Yeah, that's it there.
Yeah.
So that's when it swept into the fair value gap, and you can see how quickly price pushed away.
Yeah. But even
But
like I've just even noticed this here, mate, on this drop here, you've it's left a fair value gap here, hasn't it?
it has, yeah.
So and then it's kind of so it's there, but then it's pulled right up into it, and then you just had that drop.
It's gone again.
So yeah, it's kind of filled it before going.
That's it. I think so. When I saw that on the Tuesday, as soon as I saw it sweep the high and reject, I went looking for entries on quarter levels. Um, it didn't give an entry because it moved so fast after it hit it. It didn't give an entry, but it did down hit on that red line.
Yeah, look at that. Oh, what?
Yeah, there was an entry in there. I think it was on. It was either on the 5 minute or the one. I think it was the 1 minute I took it on. But
Right, okay. Oh wow.
it
Shall
took
I let me mark it up?
my screen mate as well, so I can have a look. I took all my markups off now, so I'm gonna have to just go back over the price action to see
So
where I am.
you've got it just this is what I like about the 200 EMA is it just respects it massively.
Yes, my entry was on the 1 minute.
This is 1 minute, yeah. So you can see rejection like pulls up right and the rejection right off the 200 EMA and then just drops.
Yeah, it swept out a load of liquidity. But the important thing is when it was coming back down. So see as it pushed up, it left like gaps, left like three fair value gaps. It if it's going to go longer, like if it's going to go higher in price, it will react out of one of those gaps and go higher. But when they all push price higher, that's when I was looking. Yeah, my entry, I think it was just below where you drew that box, Sean. The little box. There was
So that
there was a
push there.
on the opposite side of that box. When it traded through that, I market executed straight away and just put my stop up on the high.
Yeah.
Yeah, and just and took it down. But it gave three entries that day. Let me think it took two of them.
Well, you've got this one here as well, haven't you? So you've got one here.
Yep, there were other opportunities to get in as well. That was the second one I took, I believe, and it was out of where are we? Where are we? Yeah, it was out of an hour. It was out.
That's a disgusting risk reward on that.
Yeah, yeah. The risk reward on that one, I think my stop loss was like 20 pips because I put it back above the high I'd end
Yeah.
down the little one. So, and then there was another one which it left a fair value gap on the 15 minute or the hour. So confused, mate, when I'm trying to look back and I haven't marked
Yeah,
it up.
that's right. Yeah, that's right. It's fine. The thing is, it's just once you kind of get used to understanding structure and understanding candle movement and stuff. When I'm not saying come away from the rules within quarters, but when it comes to like stronger trades in a sense, your natural knowledge of trading will be better if you kind of notice, say for instance, you know that there's been a fair value gap that's been taken above, and the TQI lines up nicely for a sell, that's just an extra confluence that the chances of it going down are higher than what they would be with a different scenario. So it's just kind of being aware of your surroundings, and previous price movement will always kind of dictate what happens in the future, because the banks, nothing's random. The banks always do stuff on purpose. So it's just kind of understanding what they do, and then risk manage, and kind of trust the process and follow the process. A fair value gap, mate, is so when you have like a kind of bullish or like a really strong impulsive move. So like this would be, oh shit, what's that? This one would be technically one here. So we have this kind of strong move down here, and then what has happened is, like, Baron, if I take off the replay, get rid of that. The thing is, once you see it, you kind of see it all the time.
They're everywhere, yeah.
If I go to replay here, to here, yeah, that'll kind of, does that work? Does that? Oh, I don't know if it's actually filled that yet, but we'll check. But say for instance, we've got it there, a really strong move there, and then if we play it, yeah, speed wise, it should be all right. What's that on the 15-minute? Okay, so at the moment you've got this area here, right, which is like, this is your fair value gap. When you do your fair value gaps, Ali, are they from the bottom of the wick from the high, or would they be from this area here?
No, from the, so it's a 3-candle pattern. So it's your first candle creates the top of the fair value gap.
Yeah, so it'd be that. Yeah, it's all right, I'm just confirming. So that's your fair value gap there.
Yeah, wick to wick.
Yeah, week to week. Yeah, so that's your area there. So the banks will generally fill those before they go off in a direction, or what they'll do is they'll come back and fill them before returning. So if I carry on playing, just to give you an idea, and this is the thing, if you see like an impulsive move down and you see it pull up into a fair value gap, a lot of the time the fair value gaps are kind of filled before they carry on moving in that direction.
Yeah, they haven't got a. They can literally just nip into them by a pip and then just.
Yeah, they don't have to be fooled fully, do they? Yeah, it's just a nip. And then this is what I'm saying. So on that scenario there, it's nipped into it. So like you would have seen that scenario, your entry would have been just above that. That would have been around here. Bearing in mind you've got to allow for spread. So you may have had it a little bit lower just to account for spread putting you into it, because you don't know how deep it's going to go. And then it's a case then of it just going, and then I'm not saying start trading fair value gaps, but this is definitely a tool that it's worth knowing about. When you're looking to get into trades.
They're pretty powerful when you. There's a lot to them, mate. I'll have to link the videos that I learn about them from, because they go quite in depth, and how they can help you market direction, and when prices turn in from a certain level.
Yeah.
I've got a question just about that fair value gap. I say you've marked out that 1 minute fair value up there and it's nipped into it. Okay, so does that still leave part of a fair value gap then? Obviously, there's still part of that untouched. So is that still classed as fair value gap now? Or how does that work?
It's still considered open. Sometimes I get into them 3-4 times, over a period of the day or maybe 2 days. The way the more they tap them, the more likely they are to fail eventually.
Yeah. Okay, sound.
So ideally, you want it to kind of nip into it and just go, just like impulsive move straight out of there and just go the opposite direction.
Yeah, the best thing you can do is then drop down to a lower time frame and look at price and watch it. You want to see it disrespecting smaller bullish fair value gaps, but respecting bearish ones, and then you can take your entries off. Off the smaller fair value gaps going in the opposite direction. I think CJ was a prime example today, because I think a few of some.
Yeah, we'll go over CJ so so this is like a decent learning for you guys. I didn't see this, but if Ali explains it, then you guys can kind of see. I don't know what's happened to the indicator there. One sec. Oh, it's kind of moved. There we go.
Up to the 15-minute CJ, Sean. All my markup for the GJ trades are in I stuck in the group, so people should be able to find them if they want to look over them.
Yeah, let me just.
If you wouldn't mind linking those videos up, Ali, I'd be interested in watching, buddy.
I'll put them in the group, mate, after the live.
Yeah,
And
top
also,
man. Cheers, buddy.
also just to add, Paul's just put, so Paul's got an indicator, and you guys, I think it's £25, but it's your indicator. So it's as long as Paul's alive and he can't take it off you or get rid of it or delete it. That indicator's yours to keep, and he's just said on there that it's actually got fair value gaps built into it, so they mark the fair value gaps out for you. We'll go over that actually, Paul, after this, so that people can see it, if that's all right. If you're able, I don't know if you're able to talk or not, if you've got the little one, but we could go over that. But yeah, okay, cool. Yeah. So where was the trade, mate?
On the 15-minute, if you look at the 8:15 candle in the morning.
Sorry, what time, mate?
15 a.m. Today, this was on the 15-minute.
Yeah, okay. Yeah, so I'm losing track of days. What day is it? It's Friday today. Is it Friday? No, it's Wednesday. Fucking hell. Fucking see, all over the place. What time, mate? In the morning?
15. Spread open your chart a bit. You should might be a bit easier.
Yeah.
It's up around all that consolidation there on the red
This
line.
area here, or this here.
So if you open it up a bit, because I can't really see your screen.
Oh, sorry, mate. Yeah. Right.
Right. So if you look at the 8:15 candle, back there.
There we go. Yeah. Okay.
In there. So I believe this signaled a sell on the indicator. I think a few lads took it.
Yeah, if you see here. Yeah. Actually, I think I don't know if he's on. John, is John on? John, I think this is the trade that he lost today, actually.
Yeah, I mean, on the indicator, it looks a banging setup.
Yeah, it does. It looks, yeah. He said to me what was wrong with it, and I was like, quarters wise, mate, there's kind of nothing wrong with it. Like, it follows the rules. So you got a wide Bollinger, like it's rejecting off of the quarter. So it looks like a good trade, but
so the only thing that kept me out of that trade was that fair value gap, because there's potential it will use that gap to go longer. So wanted to see that the lower part of the gap. I think it was 106.926, that price level.
Yeah.
I needed to see a body closure below that level. Now, because both those bodies closed within, I stayed out. Because there is the potential that it could go up a little bit and then turn around and come back again. But that's you need to see something like that disrespected before you go long or you go short.
Yeah.
It's just something to watch out for, because it then gave, if you drop down to the 5-minute, it gave a brilliant entry, which I actually took on demo. I didn't take on my live. So if you follow price along, you see where, see after the 15 gap, it consolidated a bit and then dropped. So come back a bit.
Yeah, here.
That one there. So you see that fair value gap there that it made?
Yeah.
So
that one.
That's it. That lower candle is an order block, the white one.
Yeah, this one. Yeah.
Price left it, created a fair value gap and went higher. It then came back into it, respected that, made another gap, and I entered off that gap when it came back to it. Because that created another order block on that one.
Who's that?
Go on. I don't know if somebody was asking a question then.
Oh, was someone asking a question? No. Okay.
But you can see prices when it comes out of those levels, it's making new highs.
Just gonna mute this guy. I don't know. It just says iPhone, but yeah. So yeah. So you got in here.
Got in there. Yeah, I market executed when it came back to that second gap, and put my under the order block further over to the left. I think.
So yeah. Cool.
I'm still in it now at the moment on demo.
Oh yeah. It's just
I'll hold it now through news and see what it does.
Yeah, nice.
But you can see how it respects, you know, those gaps, those fair value gaps, and you can see how they're both the same with the order block with the strong push up, which leaves a gap, and it comes back each time just to, you know, to test it and then go longer.
Yeah. What's really nice about that is you've had what, over an hour on that quarter level, and to be fair, it lines up decent with the indicator here. To be fair, lines up really nice. So that trade there would have been a lovely trade, because you can see how price is struggling to, and this is an example, is you've got the fair value gap there, which it's nipped into. It's struggled to break the quarter theory level, and then we've had that come in there. So that trade wise is, yeah, it's fucking nice, because really you're not.
Oftentimes you wouldn't be able to see this on a 50-minute. You'd have to go down to the 5-minute, which
Yeah.
I've spent a time looking at price, you know, on the lower time frames, like nearly 2 years. So a lot of people are probably they aren't going to see this straight away. But if you can go back and follow price through the day, if you mark out fair value gaps on like the hour, 4 hour, daily, and just watch how price reacts around each of them, because there was a mega setup on NJ as well today, which happened. It's absolutely flying. It's still flying now, mate. It's gone about 1 to 20, I think.
This here.
Yeah. No, if you drop down to the 4 hour.
Oh, the 4 hour. Yeah.
The 4 hour.
What's that?
It was early this morning. Great. I think. Yeah, it's 3:30 a.m. If you look at 3:30 a.m. on the 4 hour, I think it's that gap there, mate. So
This one.
So that fair value gap there, I had that marked this morning. I marked that out. The price hadn't hit it yet. Obviously, it just created it.
Oh. Sorry, yeah. So at that point, it would have been here, right?
Yes, that's it. That was it. And then if you drop, so I had that marked as a potential, because obviously it's gone long and made a fair value gap, and then I'm looking for price to potentially trade back into that to then go higher, which is exactly what it did. And if you drop down to the 15-minute and look inside that 4 hour where it came back to, there's a 15. So you've got an order block in there. You've got like so from that wick to the low of that white candle, that's my order block. But you got the fair value gap, which it hit perfect.
But then if you wanted to be safe with it,
you'd put your stop under there, or under the 4 hour, at the bottom of the 4 hour potentially.
Yeah.
You wanted to be safe.
Yeah.
But it hit perfect, mate. And it's, to be fair, it was flying a minute ago.
I'm looking at Tom's face, and he's like,
I'm like trying to take this in, man.
Yeah, no, cool. Tom's like, right, back to the fucking drawing board.
Mate, I need to learn, don't I? So I'm like,
and it's signal to be fair.
I forgot I'm on the camera, to be fair. I'm concentrating on fucking probably look a right retard.
No, it's all good. It's all good.
To be fair, didn't it, Sean?
What's that, mate? Sorry.
Did signal NJ, didn't it, by the look of it?
Yeah, it did. Yeah. It was nice reaction off of. But this is what I'm saying. Yeah, like if you guys can be picky enough where you've got your trading plan in, and you're noticing stuff like this, I don't know. To be fair, I don't know how much that would improve your win rate percentage wise, because we can back test it, and there'd be a lot less trades, but the win rate I could imagine would be pretty high, and the risk reward would be probably phenomenal.
You don't even go down to the.
Probably only need one of these trades a week, and that would be you done. Because if you did catch that, depending on how you'd want to play it, your low would be here. So in this scenario, you'd have your stop loss under here, a couple of pips under here. You'd be wary that gap needs filling, and then obviously you've got your quarters there, so you're just kind of waiting. So it then comes down to you on how you want to manage that trade. But
yeah, I mean, even if you mark out, say, hourly or 4 hourly fair value gaps on your charts, and then at least you know then if it comes back to that level, you can be looking for signals. Or you can be for price to turn, to show signs of it turning.
Yeah. Like this is still going, and this is so far here. Just over a 1 to 4,
I would
and
have had a
that's not even taking that into account. That is depending on how risky your trading is. Like you may recognize that price is pulling back in, and the green ball is likely to appear, and you might have actually got in sooner, depending on how
I mean,
Ali gets in early, didn't you, mate? So
my
your
stop,
is a little bit better.
yeah, I would have had a 3-pip stop on that if I had taken that. Sounds mad, but that would have been sat at about 1 to 18 at the minute.
Yeah. You would literally not need to trade for the rest of the month. If you made 18%, guys, and you fucking carried on trading, I'm gonna kick you out of TFT. There's absolutely no reason that you should be. If you're making 18% in a trade, you better not be fucking trading anymore that month. Get a fucking payout.
Yeah, the likelihood of somebody holding to 18R is pretty slim. I think your nerves.
100%. Your nuts would be going a fair bit after 5 or 6, to be fair, depending on how much
If you
you risk. But
Mate, mine go when it goes 2 to 1.
Yeah.
I'm like shit.
Take it.
I can hold them all day long, but yeah, on evals and stuff, it's a different story. You want to be out.
Yeah, you do. The best way to
Need
pass valuations is just secure profit.
exactly.
Don't try and pass them in. Don't try and pass them in 1 or 2 trades. Just fucking secure profit, and it will just slowly build. That's the best way to pass funded accounts.
Yeah. All I'll say is I'll put the vids in, John, and people want to go back and they can just run, just follow price. But
Yeah.
also, if you have a 15-minute, say you had a 15-minute fair value gap, you want to then look at the 1 hour and the 4 hour to make sure there isn't anything below it, like a gap on the 1 hour or the 4 hour, because often if there is, it will trade straight through the 15-minute.
And it'll go to those.
It'll go to the hour or the 4 hour. So
technically, it's going to go to potentially the deepest fair value gap that's on that day.
Yeah, higher time frame, always trumps the lower time frame. So,
of course, yeah.
The GJ was a prime one. I think it was the second entry. It had 2 15-minute fair value gaps, one above the other, and it wasn't on the hour. There was an hourly one above the first 15, and it came straight through the first 15 and went into the hourly one. So it's just a prime is that you need to be checking higher time frames.
Yeah,
and also for your direction, if you've got a monthly fair value gap and price is working out of that, then there's a high chance that it's going to continue lower or higher out of a monthly.
So this is why it's important when you're doing the quarter theory stuff, guys, is to kind of recognize the trend really, or where price is going to go, and then trade with that. This is like that trade that lost earlier. The what was it, CAD JPY one? You're taking a sell on it, but you had the EMA underneath it. And actually, if you look at it, the EMA is actually kind of coming up very close. So this was your trade here if you would have taken it. Bearing in mind, by the time price would have worked its way down, potentially like this would have been over your TP anyway. And are you wanting to take those trades where the EMA is coming into your TP area? And this is kind of where you've got to really nitpick your trades. But then ideally, don't get me wrong, if the EMA was kind of coming up here and like that, coming down, then I'm still not saying it would have won. But when I'm kind of putting those confluences together and I'm like, okay, this is a good setup, I would any day of the week I'm going for a sell. I want the EMA in that position, not that position, because that to me is just another barrier for it to break through for me to get my profit. So, but if it's here, then that's to me that's going to potentially react off of that, come down and just start a downtrend underneath there. So they're the kind of things you've got to think of and kind of look at. But you've also got to bear in mind that no strategy is 100%. So if you lose a couple of trades, don't get disheartened and think it's a load of shit. It's just part of the process. And anyone out there that's making out they win all the time or whatever, they're just full of shit, because no strategy is 100%. You just, and this is the reason why risk managing and sticking to your trading plan is so important. But if you're able to pick out fair value gaps and kind of EMAs and whatever, just to add that extra confluence, then it's just going to help you take better trades. So no, cool.
Just say to anyone that wants to, just get on your charts on, and back test it and just mark them out and just follow price.
Should we have a look at let's have a look at Paul's indicator and see. I'm hoping I've got it. I should have it on here. Let's have a look. It's the order block one, right? The 5.1.
I think it is.
Okay. Right, Paul, I don't know. Paul's at the gym, so fucking monsters constantly at the gym. So I don't know if he can answer or not, but I'll see if I can. I'll see if
on
I
the
can.
headphones. Can you hear me?
Yeah, I can hear you, mate. You okay?
Yeah, good. Man.
So if I go to settings, mate, what am I playing around with?
I'm just going to the cafe, but
So
Yeah,
imbalance is off at the moment.
that's it. Yeah, so if you put a tick in that, then the
Ticking that.
imbalance will come up.
And then what about the order block one, mate?
So the order blocks. So there's two different types of order blocks. When we first started doing it, order blocks was just for the candle. So when you've got the body of the candle, the next candle after has to be engulfing that previous body. So that's how we originally had it. And then Jason was back testing and doing lots of research on it. And then he found that actually an order block really should be the body of the candle and the wick. So it's where the following candle engulfs both the body and the wick of the candle. So we've got it on there so you can have both of them. You can have the original version, which is just the body, or you can have the
true engulfing one.
We went to, the true engulfing one.
Okay, so where's the fair value gap? Let's have a look.
So that is imbalance. It's the imbalance.
Oh, it is imbalance, is it?
The same thing. Yeah, they're the same.
Oh, okay. Okay, so it's this then. So
yeah.
So with this, yeah.
The yellow boxes, the fair value gaps or imbalance. As candles come up and start filling that gap, then that box will remove. So it'll gradually get thinner and thinner as the candle comes up and fills that gap.
Yeah. Okay. Yeah.
What I will say, Sean, is if people use the indicator, don't just start selling from every fair value gap you come to. You just end up frying your head because you'll get stopped out where you've got to have a higher time frame bias as to make
analysis.
And quite often at the top or bottom, whichever way the price action is going, of the fair value gap, you'll have an order block as well, which obviously quite often likes to tap into an order block. So keep that in mind as well.
Yeah, so a lot of the time what people generally look for is they look for break of structure initially, don't they? And then once break of structure's happened, it then pulls up into a fair value gap before kind of going down. So if that can kind of coincide with a reaction off of a quarter theory level, then that, like you've got like this area here, for instance, like price is working its way up. You've got this area here right on quarter theory level. Depending on how you perceive the markets, we could get, this is a major level as well, so we could get a reaction. So if to me in this area, if I'm kind of looking at that and I'm looking at this area, I'm wanting the indicator to kind of show me that there's a green ball at the top and kind of following all the rules, and then I'll leave that on there just to see if it reacts or not. But like just looking at it now, we're looking at this area here. You've got an order block here. You've got a fair value gap or imbalance gap there that needs filling. So there's various things that you can kind of add to see, and then it's working its way nicely up to it. So it'll be interesting to see what it does around this area, whether we get a reaction down to here or it goes down further. So yeah, I'll leave that on there, and then what we'll do is we'll kind of come back to that on another session. So I'm doing a session again Friday morning. So what I'll do is I'll leave this on there and we'll go over this. I'll make this a little bit wider so it's a bit more prominent. and then we'll see what happened, and then we can talk about that and see if it kind of reversed on it or if it just blew through it, and we can see if we can work out why it done what. But no, cool. Awesome. Is there anything else you want to go over, Ali?
No, I'm good. Somebody wants to look at AJ, I think.
AJ, yeah.
Look quite tasty on the 15-minute, actually.
Okay, yeah, we've got what a potential setup now.
Possibly. I'm not too keen on where the EMA is.
Oh yeah, so we've got this here. Yeah. So I'm
But
just going
it's
to yeah. So yeah,
Got news at 7 p.m. I wouldn't bother.
yeah. So in 20 minutes, yeah. So
Got
I would,
FOMC.
yeah, no, that'll be a big fucker. That will.
Yeah.
yeah. So yeah, with news, yeah, don't take anything now. And for you guys that are new, and like this is the first thing. As soon as you start your day, straight away, just come up to here and just go to news and just see what is for today, because that will, doesn't matter how good a fucking trader you are, if you don't check the news, you're gonna get fucked up. So
Yep.
so just always check this and see what's red. I don't really have an issue trading orange and yellow. I will generally stay away from red. Some people like fucking trading red news, but to me it's fuck that. So yeah. But always check this, guys, before you start your day. This is like technically, I don't know, you loading your van. You fucking need to do it every day before you start work, or you need to know what's in your van at least.
Trade up, just don't trade through it.
Yeah, this is it. Like, so yeah, this is three, and this is UK time as well. So it'll be 3 p.m. UK time. So trade till like 2:30, 2:45. You might notice it like 2:45. It might start getting a little bit choppy. Maybe 10 to 5 to 3. Then just after 3 o'clock or 3 o'clock on the dot, you're going to get some pretty spread will widen, and you'll get some pretty aggressive moves, which are not always fun. So yeah, so it's just secure profit, guys, when it comes to news. Just yeah, it's not worth the risk. Cool. I'm just trying to think if there's anything else. I think that's it.
I've got one question regarding this on the indicator down below. You've got these levels 70, 12. You know, the green ball appears. Is there a particular area you should be looking for that green ball, like numbers, for example? Like
What? So you mean these on the side?
Yeah, on the right hand side, like, is it a percentage? Is it overbought and oversold? Is that what it is represented?
Yeah, technically, it's like it kind of like and Paul helped me make this, but as far as I'm aware, it's similar to like, you know, the RSI when you get like the overbought, oversold areas. So you know, with like simple strategy one, you've got I think he uses 30 and 70, doesn't he?
Yeah.
It's kind of similar to that, mate. So yeah, so I noticed sometimes that, and I've been asked this, when prices consolidating, say down in this area, and you've got like the green ball on the 50% line, and then they're like, oh, and the blue line's just above it, they're like, oh, do we still take sales? To be fair, I haven't fully back tested it to even notice that. The way I've been back testing is pretty much through my rules. If it lines up and the green ball comes in, I've been taking it. I haven't done the testing on it with
You haven't actually checked the numbers on the side, so they're irrelevant in your back testing.
They're irrelevant of my back testing. I haven't included it in my back testing. By all means, guys, if you want to look at it, you may get better results by it being in more of the extremes of like technically the RSI areas. But the way that I've tested on FX Replay is literally been just following the rules and then just taking every single one of those trades.
Because I have seen it sometimes where the green balls appealed for a sell, for example, but it's been like around about the 60 level, so it's been really high, but then indicated for a sell. So I'm like, it just makes me double think.
You're just a bit cautious. How
well,
did they?
I don't know. You know what I mean? I'm
how did they pan out? So what you would have had, as a visual, right, is so your actual, this would have been up here. This would have been up here, right?
Yeah.
And you're saying the median line probably would have been there, but then your crossover would have been roughly like here, maybe.
Yeah.
So roughly,
and it's which is still quite high on the
and then your ball would have been roughly around here. That would have
Yeah.
been your ball there. And then you're asking, would you take a sell on that?
Yeah.
No,
Like if I put,
sorry. No, I've done that the wrong way around.
no,
Sorry, I've done
the other way
buy.
around. So for
Yeah,
example, it's indicated for a sell. Sorry.
yeah.
So that's correct, but it's really high up on that right on the terms. Is it a percentage? I don't know what it is, mate. I don't know what the numbers represent.
It's percentage. So that's the 50% mark, and then that's 60. But it's done
Right.
on the overbought and oversold areas, so the extremes of areas.
Okay. Well, I won't go too deep into that at the moment. Then it doesn't. If you haven't gone too irrelevant in it, then I didn't know if there was a better area to target. That was all. Where the green ball appears,
The
or an area to avoid.
the only thing that I have noticed, and which I've told you guys kind of already, is with regards to the bands and then being wider. So when you've got the wider bands, you have, because what price will generally do is once it comes out, it may pull back, but it generally goes to the opposite side, and it just kind of does that constantly. So the wider the bands, the more price movement you've got. So generally, if the bands are thin, you're in a kind of consolidation area. If your bands are wide, you're generally in kind of like a large trending area, if that makes sense.
Yeah.
And they're the kind of ones you want to be taking, is when it's kind of trending, really. Like if you've got a really nice uptrend and it's pulled back onto a quarter theory, and now you're adding like various bits onto it as a confluence, then that's a better trade to take than a thin Bollinger Band that's just kind of reacting in the middle. Yeah, so someone's asked, who's that? Oh, Callum said about FX replay just has stock indicators, you can't load any. Yeah, so when we're doing FX replay and we're doing the back testing, I've got one of my screens is TradingView, the other one's FX replay, and then I'm pretty much mirroring the trades on both, and this is why it takes quite a while to back test. It generally takes about an hour to back test a month with two screens. It'd probably take triple that long with one screen because of all the pissing about. So yeah, so to do 2 years it take 24 hours technically to kind of do 2 years. And that's just to give you an idea. And I was getting pretty quick at it, doing it as well. But it's just, yeah, it's a bit time consuming, but I've got a few people on it at the moment. So, and we're going to be focusing on more back testing results with different pairs over the next month or two.
Sean,
Yes. Yeah. Okay, mate.
on AJ, just
Yeah.
something, if you drop the fire, we might
Sorry, you broke up then. What'd you say?
go on to the hour.
Hour, yeah.
Yeah. So you see price at the moment is in the process of forming a fair value gap at the top with its hour candle.
What's your thinking of this?
Well,
You're thinking of it having a strong push down, you mean?
No. Well, where it is now, if that closes where it is, it will leave an hourly fair value gap.
Oh, like a tiny one here?
Yeah. If that, see at the moment, but it might close it up if depending where price action finishes. But
yeah,
another thing, so it's obviously failed to make a fair value gap going higher currently, because otherwise it would have traded past the wick of the previous candle.
Mm-hmm.
That's at the moment, that's an indication that price might want to come lower. But if it does leave an open hourly fair value gap there, when it could potentially trade into that and then go long. So you would want to see that lower level at least disrespected, which would mean it created a fair value gap on the 15-minute.
What's
if you drop
this?
No, where currently.
Yeah.
So if that remains open,
yeah,
means it will create a gap. It could potentially then on the next candle, you might be thinking, oh, I'm going to sell, but it might trade into that gap and then go
up.
Yeah. So if you drop to the 15-minute now, leaving that box there. So you can see at the moment, if this 15-minute candle trades through it, it will then create a fair value gap on the 15-minute, like a bearish one. If it trades through the... I can't see. I've zoomed in too much on your screen. Yeah, So if the current candle it's printing now, if that pushes down, it will then leave a 15-minute fair value gap above. And that will actually take a sell when it trades back up into that.
Okay.
Showing clear intention that it wants to go lower.
So you'd be looking at this area here.
Yeah, if it forms a gap then on the 15-minute, but it would have to go through that lower purple box.
Okay. So it'd have to go down here first, then go into this.
Close below it and then pull back up into that.
For it to then reverse, or for it to then go
For it
up
to reverse.
to reverse.
Yeah, I'll try and mark this out and put them in the group, but it's just something, you know, obviously it creates an hourly fair value gap on the other side. That's more important than anything, you know, create on the minute. But if it fails to make one on the hour and it makes one on the 15, then that one would be what I'll be looking to go shorter to take a sell. I'll mark this up so people can understand. But the videos will explain it a hell of a lot better than I can.
Yeah.
But they might need to watch.
Yeah, because with the rules, you would technically be in this now on pretty much. So that pulled back that on that line. Oh, wrong one. So your entry would roughly be there, and then you'd have your stop loss up here. I don't think, yeah, you just have it there because you got that high here that is it's created an equal high there pretty much.
Yeah.
And then that fair value gap's been entered there, right? That's been filled there. So prices come down, fill that fair value gap there if you look. Yeah.
No, I got bored. I've watched a fair bit of ICT, mate, but he does send me to sleep.
Is that right though?
I can't see where your lines are, mate. I'm not sure if there's a. I don't
So
think there's
like
a gap.
if I make this wider, I don't know if
No.
you can.
There wasn't a gap there.
If I move this line here, if I just move out of the way, right? So you've had that strong move down. You would have had this area here, right?
There's
So
no.
it would have originally been here. One sec, sorry, it would have originally been there, right? From there.
There's a wick on the other side of that candle, so there's no gap there.
Right, so it has to be technically see-through in a sense. There can't be anything either side.
Yeah, no. If you've got a wick down the other side, so yeah, there has to be see-through. You can't have it on the other side.
Yeah, cool. Okay, I'm just confirming that's all.
But there might be a fair value gap there on the lower time frames or an order block or something like that. Just because it's filled on that time frame doesn't mean it is on the lower one. There you go.
Actually, yeah, there you go. So so for the people understanding fair value gaps, right? You've got if I get rid of this now, you've got this area here.
I don't actually know if it filled.
And would that be a fair value gap?
Yeah, yeah.
Actually, because even though the candle before that broke down, you said it's the 3 candle rule, right? So that it would be this candle, that candle, and then the next candle. So it'd be those 3 candles that are created for the fair value gap. And then you're waiting for price then to come in. So anything from here back is kind of irrelevant in the sense of this. And then you're just waiting for it to price to nip into this and then go.
Yes.
Yeah, okay. Cool. I'm pretty much the way I'm asking Ali this is exactly the way I want you guys to ask us stuff about how we trade, because you like I'm asking him like I'm thick. Well, I'm not massively smart, but I kind of that's the detail of it. I want you guys to really kind of quiz us on stuff, because that's the only, I don't know about you guys, but doing stuff and asking silly questions is the only way that I kind of developed as a trader. So you have to ask. If you don't ask, then you could get things wrong, and then you're just learning shit that don't work. So there isn't.
AJ is going 15-minute, to be fair.
What's that, mate? Sorry.
Like AJ is going on a 15-minute. It's gone through the hourly one. It's failed to create one on the hour.
I might as well just bloody do this. I never do this. I'm awful for doing this. One second, let me get rid of that. Where's that arrow? Oh, the fucking, oh, fuck it. There we go. Okay, yeah, it looks like it's going now. Okay.
So you see where this candle closes, and then it may not come back into the
It may not
15.
come up to this area now.
Because some of the gaps they call breakaway gaps, where it won't trade back into it, but it will create one slightly lower down and trade into that one instead.
Yeah.
But people just
Okay.
need to study price action around
Yeah.
where levels turn.
Oh,
But
fine.
They go support level and then come right back up to these gaps and then take and then fly down. So
Yeah.
if people miss the trade, it's worth watching it because it will often give you another entry, maybe even a tighter stop as well.
Like I said, the only downside to this is where this EMA is. Like you'd be wherever this is, I would be putting my TP just above it because there's nothing stopping. No, it's all right. I'm just gonna draw this out. So you've got, but depending on how this runs, it's going to roughly go like this. And then ideally, if I'm doing this, I'm literally going to take, I would be taking profit here. I wouldn't be doing it under here. It may wick through and pull back up and finish above it, but I just wouldn't risk it. I would similarly see this candle here, how it's nipped down just above it, and then it's kind of carried on up. When we're talking about securing profit and kind of walking away with a safer trade, that's where I would be. And really, when we follow the rules of quarters, this isn't technically a quarters trade. I wouldn't see this as a quarters trade just simply because this is running through the middle of it nearly. So the risk reward is it kind of worth it? You're looking at, you would have got in on this here, which would have been pretty much spot on the quarters in a couple of pips above, depending on, I think it was the same height. Yeah, so it would be the same. So that's your entry, and then you're going down to here. You're roughly there. You've got like a 1 to 1.5. So yeah, it's within the rules, like 1 to 1.5. But
if you look on the hour, Sean, you'll see another reason to see the fair value gap there. That's another potential that it might be targeting now.
Okay.
You
So
might
you
see
could get which coincides with where the EMA is, mate.
that's it.
So you could get a rejection off of that now. And that right on that rejection fills the fair value gap on a higher time frame, rejects off of that. And once again, I'll leave this on because I'm coming to the end of the session now, but we'll go over this on Friday and we'll see how it panned out. Or we'll talk about it within the chat. And go from there. But
you can just take profit levels as well.
Yeah, as targets similar to like liquidity or order blocks or whatever. So yeah. Have you watched is that how many hours are in ICT? Fucking hell, 46,000.
The guy I'll link the videos to, he learned from ICT, but he's a lot
it's easier to understand. Yeah.
ICT, mate, he frazzled my head with the stuff I used to watch.
Yeah. It's but no, cool, awesome. Right, guys, is there anything else you quickly want to go over? Cheers, Paul, for that.
That's all right. Do you want to show me
just
the labels?
Oh,
hello.
Oh, sorry, Paul. Sorry, go on. Say that again, Paul. We'll get to the other guys. Go on. What'd you say, mate?
Lots of people find that the labels on the TQI cover up the dots. Do you want to show people how to take the labels off of the TQI?
Yeah. So the TQI, yeah, is down here.
Yeah.
So settings, and then we've got here
labels on off in the middle.
Yeah, there we go. Okay.
And then you just left with the dots.
And you've just got the dots, yeah. Easy as that. It's all in settings, guys. Just have a play about and just I'm just trying to think what anyone else asks about the indicators. I think that's it. It was just mainly the lines. They kind of get confused as soon as the lines come up because they're really thin. So I've just explained about spreading them. Cool. Sorry, someone else said something as well.
Yeah, Sean, it's me. Sure, you're right.
How you doing, bud? You all right?
Yeah, not bad. Just so I can get my head around extra value gap. Would I be right in thinking on CJ at quarter past to the green ball, would that be that candle? Would that be an extra value gap? Am I right on that
Yeah,
one?
here. Yeah. This one here.
That's it. So what was the green? The candle that was the green. So it was those
Yeah,
three
so
candles, effectively, including the green.
yeah, so if I move that out of the way, Ali, do you want to answer this one?
Sorry, mate. I'll call the question again.
I was looking at the longer candle, which was actually the green one.
So this one here.
That's it.
Oh,
Yeah,
oh,
yeah.
sorry, you
So the
were
other
looking.
two.
Yeah, sorry. I'll remove this. It's you're looking at this one, mate. This one here, right? So from there
That's it. It's the
to
middle
there.
third. It's the second candle. Yeah.
Yeah, those.
Essentially, you've got two gaps there because you've got your
It goes up to the blue one. Yeah, effectively.
Yeah, because you've got
a gap there, then you've got another fair value gap. But I would always, if you have two gaps like that, like in those two big candles going up, I'd always take the lower fair value gap. So that
literally that.
that's probably the most discounted area in that leg of price. I don't know whether people know about premium discount. You know, I won't go into that. But obviously, price can trade through a fair value gap, but you don't want to see a body closure below it. So if that had traded down and then closed below that last fair value gap, it would invalidate any buys for me.
And do you guys know what he means by that close? So the body of the candle would then close below these, then it's an invalid fair value gap. Because then it's likely price would just carry on going down rather than you have that reaction.
It might then retrend up a bit, but more often than not, it will then turn around and come straight back.
Yeah. Okay.
Perfect.
I mean,
Thank you.
if anybody wants to message me over Discord, I'll jump on a Zoom with them one-on-one if they want to go over anything at any point. It's not a problem.
Yeah, I think with how much you guys are going to be talking about stuff, I think you guys will pick it up pretty quick, to be fair. And once you start seeing them, they're pretty easy to kind of point out. You just need to add them as a if you're wanting to use them, you then just add them to the confluences of everything else, and then just be that tiny little bit picky of trades, and then just see how you get on.
Yeah, just trade them on their own. Just use them as part of
don't trade them by themselves. It's similar to just like trading every single green ball. You wouldn't do it because your win rate wouldn't be that great. But you add these little things onto it all together, like you look at it as a toolbox, and you've got all your tools in there together. No one's going to do much with just a hammer, but you've got fucking all the other shit together in your veto, and it's kind of you're not doing too bad. So, yeah, cool. Okay, coming up to an hour. So, cool.
All right,
Is there any questions before I go?
All good, mate.
All good. Yeah, cool. All right. So, yeah, I'll obviously be chatting with you guys in the quarters area, and then I'll see you guys Friday morning for another live.
Cheers, mate.
Cool. Awesome. Thank you for that, Ali. Appreciate that.
Fine.
Cool.
Thank you,
Cheers,
guys.
Thank you for joining. Cool. See you later.
Cheers.
Cheers.
Cheers, guys. Bye.